Have you ever felt torn between playing it safe with your money and taking a big swing for massive returns? It's a classic dilemma. You want to grow your wealth, but you're also terrified of losing it all. What if I told you there's a strategy that lets you do both at the same time? It's called the barbell strategy, and it's a fascinating concept popularized by the brilliant thinker Nassim Nicholas Taleb. Forget trying to find that perfect, mythical medium-risk investment. The barbell strategy flips that idea on its head. Imagine a real barbell. On one end, you have a heavy, solid weight. On the other end, another heavy weight. And in the middle, nothing but a thin bar. This is exactly how we're going to structure our investments and even our lives. So, how does this work in practice? It's surprisingly simple. You take the vast majority of your capital, let's say 85 to 90%, and you put it into the safest, most boring assets imaginable. Think of things like cash, treasury bills, or government bonds. These are your ultra-safe, nothing-can-go-wrong investments. Their job isn't to make you rich. Their job is to protect your capital from any major disasters or market crashes. This is one end of your barbell, the heavy, stable, defensive side. It's the foundation that ensures you'll survive and sleep well at night, no matter what chaos unfolds in the world. This part of your portfolio is designed to be completely immune to what Taleb calls black swans, those rare, unpredictable events that have massive consequences. Now, for the fun part. With the remaining 10 to 15% of your money, you do the complete opposite. You go for the home run. This is the other end of your barbell. Here, you invest in extremely high-risk, high-reward opportunities. We're talking about things like speculative stocks, cryptocurrencies, angel investing in startups, or even starting your own side hustle. The key here is that these investments have what's called convex or asymmetric upside. This means your potential losses are capped. Most you can lose is the small amount you invested. But your potential gains, they could be huge, maybe 10x, 100x, or even more. You're essentially buying a bunch of lottery tickets, but with a much better chance of one of them hitting the jackpot. The beauty of the barbell strategy is in what it avoids. It completely eliminates the need for those tricky, middle-of-the-road, medium-risk investments. Think about many popular mutual funds or balanced portfolios. They often try to strike a balance, but in doing so, they expose you to risks you might not fully understand. They can still get hit hard during a market downturn, but they rarely offer the explosive growth potential of true higher-risk assets. The barbell approach argues that this middle ground is the worst of both worlds. You're taking on hidden risks without the possibility of life-changing returns. By polarizing your strategy, keeping most of your money extremely safe and a small portion in highly speculative plays, you protect yourself from ruin while giving yourself a real shot at exceptional gains. Let's think about a real-world example. Imagine the 2008 financial crisis. Someone with a traditional medium-risk portfolio likely saw their investments get crushed, maybe losing 30, 40, or even 50%. They were exposed to the downside without a lot of upside. Now, consider someone using the barbell strategy. Their 90% in ultra-safe cash and bonds would have been completely fine. It wouldn't have grown much, but it wouldn't have disappeared either. Meanwhile, their 10% in speculative assets might have taken a hit, maybe even gone to zero. But because it was only 10%, their total portfolio loss would be capped at just 10%. They survived the crash with most of their capital intact. And what's more, they now have a pile of cash ready to scoop up incredible bargains in the aftermath of the crisis, potentially setting themselves up for massive future gains. This strategy is all about maximizing your exposure to positive black swans while minimizing your exposure to negative ones. A negative black swan, like a market crash, can't wipe you out because 90% of your wealth is protected. But a positive black swan, like one of your speculative crypto investments suddenly rocketing to the moon, or a startup you invested in getting acquired by a tech giant, can have a massive positive impact on your overall net worth. Since your upside is unlimited and your downside is strictly capped on that small portion, the math works beautifully in your favor over the long run. It's a powerful way to deal with a world that is inherently uncertain and unpredictable. You're not trying to predict the future. You're just setting yourself up to benefit from randomness, whichever way it goes. And guess what? The barbell strategy isn't just for investing. You can apply this powerful mental model to almost any area of your life. Think about your career. Instead of having one safe but unfulfilling job, you could have a stable, reliable day job that pays the bills. That's your safe 90%. And in your free time, you could work on a passion project, a creative pursuit, or a small business on the side. That's your speculative 10%. The day job provides security, while the side project gives you a shot at creating something amazing, achieving financial independence, or simply finding more fulfillment. The worst that can happen is your side project doesn't take off, but your stable job is still there. The best that can happen: your side project becomes your main gig and changes your life. You can even apply it to your health and fitness. The safe side of the barbell would be consistent. Low-intensity activities like walking every day, stretching, and eating a generally healthy diet. This protects you from the downside of chronic disease and keeps you healthy. The risky side could be occasionally pushing your limits with high-intensity interval training, trying a new sport, or training for a marathon. These intense efforts can lead to significant breakthroughs in your fitness, while your solid, safe base ensures you don't get injured or burned out. See how it works? It's about combining extreme safety with extreme risk-taking and avoiding the mediocre middle. So, how can you start implementing this? First, take a hard look at your finances. Are you stuck in the medium-risk middle? Maybe it's time to reevaluate, figure out what percentage of your portfolio you're comfortable with being in ultra-safe assets. For most, 85 to 90% is a good starting point. This is your survive bucket. Then, with the remaining 10 to 15%, your thrive bucket, start exploring some high upside opportunities. Do your research, understand the risks, and remember to diversify even within this speculative portion. Don't put all your speculative eggs in one basket. Spread it across a few different high potential ideas. This approach requires discipline. It can be tempting to dip into your safe bucket when things get exciting, or to get scared and sell your risky assets at the wrong time. But sticking to the barbell structure is key to making it work. The barbell strategy is more than just an investment technique. It's a philosophy for navigating an uncertain world. It's about being both incredibly conservative and incredibly aggressive at the same time. It's about building a robust foundation that allows you to take intelligent, calculated risks that could pay off spectacularly. By embracing this dual approach, you protect yourself from catastrophic failure while opening the door to extraordinary success. So, next time you feel caught between playing it safe and going all in, remember the barbell. It might just be the simple, powerful solution you've been looking for. Thanks for watching, everyone. If you found this concept interesting, give this video a thumbs up and let me know your thoughts on the barbell strategy in the comments below. Have you tried it? What are your favorite safe and risky assets? I'd love to hear from you. And don't forget to subscribe for more ideas on how to think differently about money and life. See you in the next video.